Warehousing goods is an essential function of many shippers. Despite that, securing a warehouse insurance policy is not always a priority. But what is warehouse insurance and what does it protect? A warehouse keeps the goods of their customers safe in exchange for a fee. Warehouses offer long and short-term storage to businesses for all types of cargo. Warehouse services can include packing, pickup, delivery, and unpacking on top of storage. If you're a shipper, you know it's crucial to protect your inventory. If you store goods in a warehouse, you're trusting someone else to protect them. Suppose your goods are lost or damaged in the custody of a warehouse provider. You could face a loss in revenue of hundreds of thousands of dollars, unable to fully recoup those losses. However, warehouse cargo insurance coverage protects your goods while a warehouse or fulfillment provider has them. Your cargo insurance provider may be able to extend your policy to cover additional warehouse coverage. Warehouse coverage is usually not written as a standalone policy. It's an endorsement that a shipper can add to a standard all-risk cargo insurance policy. Policies are customized based on the type of goods, mode of transport, and preferred protection. The difference between warehouseman's limited liability coverage and all-risk warehouse cargo insurance coverage can be confusing for both shippers and warehousemen. Warehousemen are the warehouse owners themselves. The warehouse operator purchases warehouseman's liability insurance to cover instances when the warehouse is legally liable for loss or damage to cargo they have been entrusted with storing. Warehouseman's liability insurance is written to protect the warehouse operator's bottom line when negligence has occurred. A payment to a cargo owner is based on the warehouse's limit of liability to the cargo owner. United States regulations allow warehouses to limit the maximum amount of liability they owe their customers in the event of negligence in their terms of service. The warehouseman's terms of service will cap how much the warehouse can be held liable for cargo, as well as outline the types of losses they cannot be held liable for at all. Shippers can either store their goods in a warehouse they own or rent space in a warehouse owned by a third party. When a shipper chooses to rent warehouse space, the warehouse will hold little to no liability for the shipper's goods. Warehouseman's limited liability coverage limits a warehouse's liability to a small percentage of the cargo's value in the event of a loss the warehouse is liable for. The warehouse provider may only be liable to pay the shipper 10 cents per pound if they are responsible for the loss. For that reason, securing all-risk coverage on warehouse goods is better than relying on warehouseman limited liability coverage. If you are interested in learning more about cargo insurance coverage for your warehouse goods, contact TRG today. And don't forget to subscribe to our channel for more informative videos on the international trade world.